You got a lot of the banks like Citibank calling for silver to surge to over $40 an ounce in the next 12 months. Goldman Sachs was saying the same thing.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. As we cover our weekly physical silver and gold market update, joined as usual by Andy Schectman of Miles Franklin. Following a wild election week, we're recording this one on Wednesday, and it's going to air on Saturday night. So, be interesting to see what happens in between now and then. Because Andy, I heard there was election last night. I've been trying to find out who won, and now our political system can't even get that part right. So, anyway, welcome on into the show. And how are you today?
I am great, Chris. I am great. Thanks for having me. It's good to be back. Yeah, I don't know if it matters who wins. I think regardless of which party wins this election, which is still somewhat up in the air, evidently, we're set for more spending in 2021 and more fiscal stimulus. And regardless, I think it's going to be a very, very, very interesting 2021 as we're heading into, and well, for that matter, probably an interesting next 8 weeks towards the end of the year. So good to be back. Look forward to catching up with you.
Yeah, and just one last note about the election, where I was talking with someone yesterday, and I think most people in the metals community are in agreement that whoever wins, a lot of money is going to be printed. Yet to the degree that I do think there are businesses, I've interacted with some of them, some companies that wanted to schedule a time on the show to share some updates, but then they said, well, we want to hold off till after the election. So I'm seeing firsthand, I think other people are reporting and expressing it as well, that I don't know, I guess it's helpful for me where I don't know, either way, I but for people who are facing uncertainty or that could affect their business, it was really like the only way it could get worse is if they couldn't even figure out who won. And now, again, I don't know. These are just things I wonder, but I don't know. I mean, if you told me that this is all scripted and it's going to be dragged out and this was all planned in advance, I wouldn't be surprised. I can't say that is happening, but it just seems like the opposite of ideal for the country or certainly the business community.
I totally agree. And I mean, one of the things that I find, kind of interesting is that so much of what has happened this year, you could say the same thing about it, that, in the back of your mind, you wonder, was this scripted? Was the reaction to Corona scripted by all of the Western economies? The World Monetary Organization's meeting in May of 2021, 6 months from now, is titled The Great Reset. Were these things scripted? Were they planned? Did the German Bundesbank bring home their gold in 2017, labeling 2020 a hard and fast deadline? I don't know. There are a lot of things that seem as though they could have been scripted. And when you've been in this business as long as I have, Chris, for 30 years, you begin to realize that there's a very fine line between reality and conspiracy. And, sometimes you wonder, am I crazy? Am I seeing this, or am I just inclined to look at things through a conspiratorial lens? But I don't know. It doesn't make sense to me why at 10:30 at night they stopped counting votes. What, were they just tired? I was watching the election until I passed out at 3 a.m. Why does a county in Wisconsin just decide to, go home because they're not feeling well, and those votes still haven't been turned in? So anyway you look at it, Chris, there's a lot of stuff going on, and that's one of the things that makes me nervous. You got half of the country who's going to be very, very upset, and half that will be elated. Either way, I think we're in for some tumultuous times, to say the least.
Well, it will be interesting. And yeah, like you said, I mean, I try and balance mainstream reality with the things that I just find as I go and search more. And, it sure seems like, especially with the way I'm following Corona, there was just sure was an awful lot of money and plans that flowed out quite quickly. As someone who was actually in downtown New York running from the dust cloud on September 11th, it was interesting a couple of years ago, or maybe even last year. I looked up what the Fed did on that day, and it's just, we will leave it at that. And anyway, Andy, one thing that maybe didn't seem completely out of left field or could have been scripted. I'll bet there are some people who were expecting it on the election night. Looking at the silver chart here, and we see, let's call it at 7:30, 7 o'clock Eastern time. There's silver at 24.40, and then it just falls off a cliff. Not once, but twice, from 24.40 down to a quick low of almost 23.20. So $1.20. I mean, it just gets hammered, then spikes back up. I'm curious, as a silver industry professional, what do you make of that?
I make of it maybe short covering, maybe in anticipation of a certain outcome that would favor silver. The big banks short in the after hours, in the thinly traded access market. When no one's doing anything, they drive the price home or down. They cover their short positions. They let it run up. You know, you got a lot of the banks like Citibank calling for silver to surge to over $40 an ounce in the next 12 months. Goldman Sachs was saying the same thing. These are banks that I think are implying that Biden wins because of his Green New Deal. But I'll simply say this, that those types of overt slam downs in a market that is thinly traded at a period of time when no one is trading is done for effect. It's a drive-by shooting. It is completely and totally done for effect, because when you try to maximize return for what it is that you're selling, try to maximize the price, you certainly don't dump as much as you possibly can in a thinly traded session. You slowly sell your product over a period of time that will allow you to maximize your return. All of these overt slam downs, Chris, are done for effect. They are done simply to create a perception of reality, or in many cases to knowing that the reaction of the market should be much higher. You know, they delink the rationale people have for running to gold or running to silver and shedding dollars. So there are a lot of reasons that this could happen. But the bottom line is just about all of them are nefarious, and they are done in a nefarious fashion. If this was done to maximize return, it would have been sprinkled out through the trading day to day, not sold in the middle of the night when no one's trading. And so I think in general, this is just more of the same. And when you look at ways to get ahead from this type of behavior, you simply use it as a subsidy. You buy on the dips and you don't chase the rallies. And had you done that over the last several years, just about every time you would have come out in your favor.
So I will interpret that as that if I offered to bet you an ounce of silver that there was a big volume spike right at the same time, silver really plummeted like a rock last night. I'm guessing you would not be interested in taking the other half of that one.
No, probably not. And that's just it. It's a massive volume spike. It's an anomaly in terms of what should be, but it's a massive volume spike at a time when it shouldn't be. There should be no massive volume. That is certainly not the way to maximize return on a trade. It is done for effect. It is done for a reason. It is done nefariously. And that's really what a lot of us, myself included, we're talking about for the past 12 years. And you are the only one in this industry to get Bart Chilton to admit to it, that the trading patterns of people like, or companies like JP Morgan just are counterintuitive. And when you see these types of counterintuitive trades in a thinly traded market, it's done for effect. And just because JP Morgan perhaps is on the sidelines doesn't mean that their cohorts like Citi and Goldman and the others aren't picking up where they left off. But here again, truthfully, the only way that you can successfully manipulate a market over an extended period of time is to push it in the direction that it is going. This was done for effect, but what the world economies and the world currencies are what is happening to the world currencies and the world economies certainly would dictate higher precious metals and massive accumulation by the public. And I think that's exactly what they're trying to get in front of. And so pushing the price down when it should go higher enables the big banks to position themselves better and to keep people that are listening to you and I wondering if now is the time to buy. It gets them second guessing. I think in general though, Chris, that these drive-by shootings have less and less and less effect as time goes by, largely in part to people like you who are shining a light on what is happening. But I'll tell you, it has nothing to do whatsoever with physical demand. Physical demand is as strong as it's ever been. People are fleeing to gold and silver right now. So when you see this type of a massive spike in volume in a thinly traded market, it has nothing whatsoever to do with supply-demand fundamentals and everything to do with a nefarious paper transaction for effect.
Yeah, well, I hear you, and I don't know. I for whatever it's worth, I don't know how to phrase this, but at least I we traded equity options, and I didn't quite grasp it at the time, but the shop I worked for, was especially well regarded for its training program, and I think they get a lot of things right. And one thing that struck me in particular was that, I mean, they went out of their way that if you had a position to sell, often if we, for example, buy a call option and we were selling stock as a hedge, if it was a thinly traded stock, I just imagine it would have been tossed out of the office the next day if I had ever done what I see happen on these charts. It's interesting you mentioned Bart Chilton. I was just thinking about him today, and because I'm actually creating a video of whether investors can sue JP Morgan, amongst other things, as well as the CFTC. Fortunately, there is some good news. I'm seeing some class action suits pop up, and I have a lawyer I'll be calling back this afternoon. But yeah, I mean, he confirmed a lot of this stuff, and one last question about that. It's something I've been thinking about since I saw the full chart this morning. What do you think the CFTC, do you think that I don't know, is there anyone in the staff who checks the chart every day? Maybe, what do you think is most likely? That A, no one in the entire CFTC or DOJ saw what happened last night and looked at the volume on the chart and found that odd. B, that they saw it and they don't care. C, they saw it and they would consider it spoofing. I'm legitimately baffled. What do you think when that happens, weeks after they find JP Morgan $920 million, what do you think is actually the discussion in the office today?
Yeah, it's really that's a really good question. I think that in some respects, I felt as though a $920 million fine, which amounts to under a week's worth of profit for this company, who's been fined many billions of dollars over the last decade, was kind of a way to placate the masses, a way for them to say, yeah, we sure gave it to those guys. But just the very fact that they were only charged with spoofing, when really what they were doing was much greater than that. Look, the futures markets were built to offset risk, whether it be from a farmer in a field or someone hedging precious metals, whatever. It was meant to offset risk. What is happening in the COMEX market is the tail wagging the dog. And what JP Morgan and others have done was push the price down. Originally, it was for a term in economics called Gibson's paradox, which is the inverse relationship between interest rates and gold. Because if you maintain low interest rates to create a perception or an illusion of wealth, you have to step on the price of gold, or it's the canary in the mine shaft. But I would argue at some point, maybe 2007 or 8, some point after 9/11 in 2000, but more so in 2007 and 8, the banks started accumulating it. They were pushing the price down to accumulate physical, a la JP Morgan, with 25 million ounces of gold, and at one point as much as almost 1 billion ounces of silver. Of course, they had to dishoard 300 million ounces or so as part of, I think, the settlement with the Justice Department. But the bottom line is simply that it's the tail wagging the dog. And, you know, I think the Justice Department placated. And that's one of the reasons, now I'm totally going off the reservation here, but this is one of the reasons that I have always felt that they were doing this at the behest of one of two entities, either the U.S. government or, in my opinion, probably more logically, an agreement struck with the Chinese government, whereby we will accumulate metal for you, we will suppress the price and accumulate metal for you, you don't sell treasuries. It's kind of the way that I look at it, because there's just no way that Bart Chilton would be told to back down. It's a political decision when the preponderance, the over-preponderance of evidence was pointing towards market manipulation, not just spoofing. It went much deeper than just spoofing. It went to flat out manipulation of the market. And so I would argue that in large part, the Justice Department's ruling was placating the masses to say, yeah, we did something about it. But in reality, they didn't really do anything about it. They slapped the wrist of JP Morgan, and it looks like the rest of their buddies, maybe BlackRock, maybe some of the other commercial banks, stepped in to fill the void. That to be able to drive down the price with no real logic behind dumping that kind of volume all at once in a thinly traded market, other than doing it for effect, is something that, you know, really resonates with me. That question that you ask is the $6 million question. It's the perfect question, and it's true. You know, how can they not notice it is the bottom line. How could they not? But more specifically, what are they going to do about it? And that's really the question. So I think that's a fantastic question, one that we should all think about. But here again, why are they driving down the price? They are trying to keep the price down for a reason. And that is the subsidy. That is the reason we should all not be doing as they are saying, but as they are doing. They're driving down the price and accumulating the crap out of it. Not just the commercial banks, but also the central banks. So on one hand, we can be disheartened and aggravated. On the other hand, if you are accumulating, look at this as a gift that you've been able to pick up silver what amounts to a 5% discount from yesterday. So yeah, good question, Chris. I wish I had a concrete answer, but I guess the bottom line is I think the Justice Department certainly knows about it. They were doing this as part of some sort of arrangement with some very large pocketed entity, either the U.S. or the Chinese government would be my guess. And their fine, which was really disappointment to me, their penalty to me was just placating more than anything.
Well, there you go. American politics at its finest. Although who knows, maybe the new president will come in and, see. I mean, I know I'm being a little bit of a smart ass saying it this way, but I mean, if you're really looking at all of the true risks facing the country, I don't know, it seems kind of odd to me the amount that's dedicated to going to war, given how often the U.S. is actually attacked. Yet to me, what I think is really vulnerable and is already affecting people now, and this is even while the dollar is still, I mean, people are still being conned into using it. I mean, that would seem like one of the real risks facing the country, the globe. And anyway, I guess we'll see how it goes. But Andy, I made a video the other night, which I was mentioning that, you know, if you don't like either candidate's budget plans, to me, that's why I turned to silver. And again, I will front run your talking the book comment. I was pretty darn thrilled. I've mentioned before how I was working on Wall Street, then had a long valley in the financial desert in my beginning of my entrepreneurial career. Although finally bringing that together, it's like I was there's part of me that wants silver to spike up, just especially between the book and the show, and knowing that people are out there, and I talk to them every day that, you know, are ready to see. It's also kind of just frustrating when you see someone cheating and getting away with it. Yet with that said, I mean, there's that other part of me that's like, gee, well, it's finally a chance to rebuild the portfolio, and was buying shares the other day. And I think there's a lot of people that, I don't know, I mean, I talk about it quite a bit. So for the people who are watching here every night, I found that to be the biggest shift where, yeah, there's it's going to go up when it goes up, but to the degree that how we respond, which is not to tell anybody else what to do, but that was what I thought was the positive of some of these things. And I'm curious what your customers, I'm sure you've been on the phone and hearing from a lot of them today, how have they been responding to what happened between the price and the election last night?
You know, I think people in general are really concerned and really afraid. And, you know, I'll tell you that when the price goes down, our business is up exponentially. And in general, I am seeing more concern on a very large level than I've ever seen before. And the comments that people make to me usually end with "God bless our country" and, you know, see you on the other side. There's a tremendous amount of concern and angst. But look, bottom line is that this nation's going to remain divided, and you're going to see conflict that escalates along with those quote unquote peaceful protests. But no matter who wins, no matter what happens, we're looking at a situation where all of our governments on all levels, state, local, and federal, are going to continue to take on enormous quantities of debt and make, you know, ridiculous, costly financial decisions over the long term. And so I think what you're beginning to see on some levels is a de-dollarization by very, very wealthy in the know people. We are getting phone calls every single day from financial advisories wanting to work with us, and that their clients have requested physical precious metals. These are things that we've never seen before. We're seeing mainstream participation that we've never seen before. I think people are waking up to what is happening, not just our clients who are wise enough to buy on the dips, to know that these types of movements that you were speaking about late in the evening are done for effect. But I think in general, I notice a sense of unease. I'll tell you, Chris, the bottom line to me is simply this, that never in my life have I been seen an environment where you can't even sit and have dinner with someone who has a different political ideology without being nervous that things turn upside down. There's venom to be spewed on both sides, and it I think is emblematic of the challenges that we face as a country moving ahead. A divided nation, more divided than it has ever been. Doug Casey has been talking about a civil war and secession from the red states to the blue. I don't know that we'll see that. Maybe we will, maybe we won't. But these are very, very, very interesting times. And I think that when we look at our alternatives, one of the reasons that I like gold and silver so much, Chris, is that it has a 6,000-year history. You know, silver's been money since the very beginning of time. Not only is it one of the most important industrial metals in the world, but it actually has a longer history of money or as currency than does gold. Since literally 5,000 plus years, silver has been viewed as wealth and as currency and as money. And of course, as we know now, in particular, if Biden wins, its industrial uses are going to accelerate tremendously as he pushes away from fossil fuels to his green agenda. I think that's what makes silver such an interesting buy, and people are aware of that, again, in large part to alternative media sources like you. And thank God you're not one of the few dozen people that had their sites taken down leading up into this election, the denigration or degradation of our First Amendment. You're able to continue to talk about what's important, but I think people are realizing that not only is silver a depleted asset, not only does it have tremendous industrial uses, but it also has a very rich history of being money and a monetary aspect. And that's what makes it so unique to me. And so when we look at something like silver, look, it's outlived German hyperinflation. It's outlived the Great Depression. It's outlived 2 world wars. It's outlived every pandemic. And it still is money. It still is revered world over as wealth. So, look, I think the bottom line is that people are getting very concerned. The election is a sideshow. We're in big trouble financially, and protecting yourself and your family's future with silver, I think, is one of the 2 or 3 only alternatives that I can even search my brain and find that offer value, that offer potential, that offer safety and privacy, and that offer an alternative to the U.S. stock market and the U.S. dollar, which both are, I would argue, in very tenuous positions. So I appreciate you giving me the opportunity and the platform to talk to people. I respect what you're doing. I follow every interview that you're doing. And I guess I'll just sum it up with one last piece. And I talked about this on your show before. The piece that Andrew Maguire said on your show the other day is very, very, very illuminating to me, where he says for the first time in his career, he's seeing the Chinese gobble up silver out of the refineries in Switzerland. You're beginning to see central bank acquisition of silver also. And the Chinese are way ahead of everyone else. They think in terms of decades. We think in terms of days and weeks. They're positioning for the future. That's what our clients are doing. That's what you're telling people to do. That's what you do yourself. And that's what I do. And I think that's all you really can do right now in a period of great upheaval, of great uncertainty, of great divisiveness and division. I think you go back and you fall back on something with a tremendous history and track record of being wealth, and immutable wealth at that. And so, I don't mean to be so long-winded, but I think these are times that really, really call for reflection. And the question should not be, how much gold and silver should I own? The question should be, what exposure do you want to a currency that is being destroyed? The markets that are massively overvalued, that statistics coming out of the Bureau of Labor Statistics like unemployment and inflation that are garbage and that are meaningless. I think now is the time, more than ever, to look to gold and silver as wealth, not as an investment, but as wealth, as an alternative to a system that is really, really on shaky ground. So the bottom line is people are waking up, Chris, and it's not just the hard money people. It's a wide swath of people that are waking up to what's happening, and I think that's really the trend that I've noticed more than any here in 2020.
Yeah, well, I'm on board, man. I can tell you were up reading your Art of War last night, which we're getting some Chinese references. You know how I love the analogies and canaries in the coal mine. Nibbles, my dog, loved that you said tail wagging the dog twice. So you're on your game today, sir. Sun Tzu would be proud. That was actually a pretty nifty version of the book that I found, huh?
Fantastic. I love it. In fact, that book has meant more to me than just about anything that I've ever read. It has made more sense to me than just about anything I've ever read. And the bottom line is these are theories that are very well known in circles much above where you and I tread. And I think the bottom line is that sometimes you have to trust your gut, not your lying eyes. And the whole art of war is the concept of misdirection and beating your opponent without throwing a punch. And so that's exactly what is happening here. We are being misdirected from the truth. They are using price as a tool of misdirection. Ignoring the fundamentals is a big mistake here. And that's why you have to trust your gut and not your eyes. Your eyes will tell you one thing, your gut will speak another. And that's why most people go through their life saying, damn it, I knew I should have done that. whether it be about relationships, whether it be about business decisions, or any major decision in life. I think you have to trust your gut and trust your intuition. Most of us don't do that, and those that do, I think, are typically better off. And when they're wrong, it's easier to be wrong when you listen to your own intuition and your gut than when someone convinced you to do something else. And when you're right, it's really rather sweet. So I guess my last 2 cents for the day would be trust your gut. It's your best financial advisor. And it's never been more important to listen to it because your gut speaks to you when things are on the line. And this is the time to listen to it.
Yeah, maybe Peter Spina will let you borrow his trade phrase. He offers his 2 ounces rather than cents, which is great. Andy, before we wrap up, and I hear you got a silver special hot enough that it's melting your igloo up there in Minnesota. But I did mention on the show earlier this week, one of the things that I've been digging into lately is contacting pawn shops, We Buy Gold operations, just any place has whether they have scrap gold or metal that they want to sell for any reason, trying to simplify that process. Could you mention also anything you might say to folks, whether they're anyone that might be looking for refinery services, that they should be well served to know about what you guys do up there?
Yeah, absolutely. We can assist with that. We'll make sure people get the highest price in the country, and they can send us their jewelry or their candlesticks or their flatware. We have the ability to melt it down, to pull stones out and send them back, or to buy them. Full service refinery, we will offer percentages much, 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 much higher than you'll find elsewhere. And look, some people who are sitting on, a whole bunch of silver flatware that they got from mom or grandma, they never use it. They can sell that, turn it into silver coins if they'd like. These are all things that we will provide. We can help with shipping and make it a real easy transaction. Turn something that's collecting dust into cash or into coins. So that's a good point, Chris. And jewelry that's sitting in a drawer that you never use, sell it and buy some coins with it. We're happy to provide that service and guarantee a really, 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 really high price in comparison to what most of the industry charges. There's a couple companies here in Minnesota. One of them was called the Gold Guys. They have shops all around the country, all around the state, and they pay 55% of melt value. We're going to be somewhere a whole lot closer to 95%, 97% of melt value, affording people the ability to maximize what they're receiving, and if they want to trade it into a physical silver and gold. As far as a special, we do have in stock right now about 25,000 silver maple leafs. They are not 2020 in this case. They would be back dates, in most cases in sealed boxes, always in mint condition, 100% money back guarantee. And we can do those at $3.49 over silver spot delivered. For Arcadia listeners, simply email Arcadia@MilesFranklin to receive the $3.49 price over spot for silver maple leafs. And of course, as always, as a sincere token of my appreciation for your efforts, for letting me be part of it, we donate a portion of every single sale to Arcadia to keep you moving and Nibbles fed along the way as you're traveling across the country.
Well, I appreciate that. Especially Nibbles is excited too. One of the things we're going to get in our Arcadia store soon is the 4-ounce silver dog bone, which all of you pet fans out there will be able to pick up soon. I'm also, Andy, we're in crunch mode to see if we can get the silver Bernanke by Christmas. So you and I can talk a little bit more about that offline, as they say. But in either case, thank you as always for joining me. Information about any sort of metals, Arcadia@milesfranklin.com. Yara will help you out there. And with that said, we're going to wrap up for this week, but If you want some more thoughts on all this election insanity and just some nice, calming, fun ways to respond and enjoy having your medal sitting there with you like a great security blanket, well, that is coming your way now.